world is digitizing and so are financial services. So far, I worked at 2 fintech companies, and over time, I've learned that the success and growth of such companies stems primarily from disrupting a decades-old industry through tech, while consumers are becoming more adoptive of digitization at the same time. That's why many fintech companies such as Visa, Block, Intuit, and many others have been growing so much in recent years, and at a faster rate than the growth of many other companies in the S&P 500 index. While 2022 was the weakest year for private companies going public and had the least amount of IPOs in recent history, there are multiple private companies that are on board with the IPO train, waiting with their ticket to weather the storm before they board it. And I'll be talking about 4 of those which I'm following the most. The first company was Stripe, which was founded in 2010. Stripe took over digital finance with their payment processing platform that allows online businesses to easily integrate a payment system into their website. Since then, it has been valued for over a whopping $95 billion from the last funding round in 2021. Although that valuation declined to $65 billion since the market downturn, its business remains strong and growing. Stripe makes money primarily from charging the merchant a rate of 2.9% of every transaction plus a small fixed amount. As you can see, the digital payment market is projected to reach multiple hundreds of billions of dollars by 2026, which means that Stripe might have the potential to grow at a high rate as it has been in its early days. Stripe's mission statement is to increase the GDP of the internet. That acts like a positive feedback loop for Stripe, because the more transactions are on the internet, the larger Stripe's market becomes. So while Stripe's business model is definitely sound, its competition remains negligible other than PayPal. But my first reservation would be that Stripe's valuation when it IPOs is going to be extremely high. And in addition, this is more in the speculation realm, but if cryptocurrencies become more popular and a more widely accepted form of payment, that could undermine Stripe business that depends on cash and regular currencies that we use. As an example, if a merchant accepts Bitcoin as a form of payment, they will receive the full amount rather than have a third-party provider that takes a chunk of the transaction and keeps it for themselves. The next fintech company that expressed its intentions to IPO is Plaid. Plaid allows users and platforms to allow the users on the platforms connect securely to their bank account. Say, for example, when you use Venmo, you have to connect it to your bank account, because if you want to send money, money has to be withdrawn from your bank account, and if you want to receive money, it has to be deposited. Plaid allows that to be done securely. So in essence, Plaid is the middleman for any financial app that you might want to have your bank account connected to, so that it can be done securely and you do not need to trust the platform. You can trust Plaid that they do what they promise to do. To help visualize this, this diagram shows how Plaid acts as the interface to financial institutions for different apps that require access to your bank account. Instead of trusting each of them, you would trust only a single platform that is built to provide a secure access. So in Plaid's B2B business model, it relies on companies such as Betterment, Venmo, Coinbase, and others to pay for allowing their users to connect securely to financial institutions, which is core to their business. Plaid's revenue has been growing at a fast pace, hitting about $250 million in 2021. Their continued double-digit revenue growth relies on multiple factors and mainly on seizing a larger slice of the fintech market that is projected to grow. With a compound annual growth rate of about 17%, the market size comprising fintech apps and services is expected to reach about $950 billion. This, alongside the expected increased adoption of digital financial services, leaves Plaid a lot of room to grow until it matures to become a company with healthy profit margins for investors and shareholders. Plaid's upside doesn't stop there. Plaid also has opportunities to grow horizontally. Plaid will be in a good position to provide auxiliary services related to their core business. Although, as with Stripe, Plaid is also vulnerable for any cryptocurrency becoming widely accepted. But in addition, since their core business is essentially being a middleman, Plaid is more exposed to risk in the long term Because what if the financial institutions allow for integrations out of the box for these different financial apps? Which also seems to be quite reasonable because these financial institutions also start growing large fleet of software engineers and are becoming more tech-oriented. The next fintech company I'm on the lookout for their IPO is Chime. Chime is the most popular neobank, a bank that provides all of its services online. So you can open a checking or a savings account and use any traditional financial services all through a mobile app or the website. It was founded in 2012, and about after 11 years, they've attracted over 15 million users that use their app and the banking services that they provide. Chime's valuation hiked to $25 billion in 2021, and it was set to IPO in 2022 with a market cap of $35 to $45 billion. And unsurprisingly, that IPO has been postponed due to the bad market conditions. Chime is the largest neobank, and it makes sense why they maintain the largest and growing user base. By merely scrolling through their website and reading the description of their services, I felt compelled to open a checking account and ditch Bank of America that I currently use. Speaking of banks tend to be profitable businesses with healthy profit margins. Chime is not exactly a bank, but if it does inherit the high profitability margins that banks usually have, they might be able to grow rapidly and become much larger in the future. Chime has also been making strategic partnerships to support its growth. The company extended its partnership with Stride Bank that generates revenues of over $1 billion annually, and this is a key partnership for Chime to continue growing their outreach and expansion of their product portfolio. In the bearish case, Chime might find it difficult to differentiate itself from the competition of the big players in the market, and differentiation is one of the keys for a market that is highly competitive. No fees and a compelling user experience might not make for a strong value proposition, as over time, large banks and financial institutions are catching up. The fourth and final fintech company that has set its eyes to IPO, which I'm following, is Klarna, which is the oldest company out of the previous three and was founded in 2005. Although it is valued at $6.7 billion, it is the highest valued fintech company in Europe. Klarna has been generating revenue for a while, and so far they have been offering a wide range of services, including a platform for online shopping, which was their core business initially, and more recently a buy now, pay later service. Klarna's revenue has been consistently growing and reaching $1 billion in 2020, which is 10 billion in Swedish kronas, and afterwards in 2021, growing their revenue by additional 30%, reaching $1.3 billion. While Klarna has a lot of competition from other fintech companies such as Affirm, Afterpay, and PayPal that offer a similar buy now, pay later service, Klarna sets itself apart by offering a wide range of payment options and by dominating the domestic market through partnerships with dozens of the largest retailers in the USA, and also by being the lead provider in the service worldwide through similar partnerships. While Klarna has a very wide global outreach and it sets itself apart by offering a wide range of payment options, it's still a risky business. Buy now, pay later businesses have very thin, if not negative, profit margins. And the public companies that buy now, pay later are their main business, such as Affirm, account for that. Klarna has reinvented itself multiple times in the past, and additional reinventions might be imperative for their long-term success. And this wraps up the video. I hope you have a better idea of fintech companies to look out for their IPO. The process usually takes 6 to 9 months, and the earliest we will be able to hear about it is maximum of 2 weeks before it happens. If you ever wanted to join a fintech company or build one yourself, software engineering is something that you should consider. And if it is something that you are considering, check out the next video on the end screen where I talk about the pros and cons of transitioning or doing a computer science degree with no relevant background. So with that said, thank you so much for watching, and I hope to see you in the next one. Bye.